Hi guys, welcome back to the channel. My name is Sean and this is my girlfriend.
Hi, I'm Michelle.
Today we're going to be talking about the stock market crash and how the crypto asset has been actually dropping the last couple of months, coming into the end of 2021 and the start of 2022. So we're going to analyze 5 different reasons why we believe this to be the case. Okay, so the first reason I think would be Omicron. I think that it's a very obvious thing that with the pandemic, there's lowered business confidence. A lot of FMBs are closing down. There's a little bit of a bearish sentiment, and with poor investor sentiments and poor confidence in the market, this will reduce the volume and open interest in both the spot and futures trading. So, with lower confidence, we have more conservative approach, and this generally induces a more cautious approach and a culture of savings by prudent investors. So most people don't really want to be spending at this time. The velocity of money has dropped, and we can expect more of a market slowdown. But this also causes less people to buy stocks, and as a result, this causes a liquidation cascade on the futures market, the derivatives market, and most of the shorts are covering the longs, and a lot of the over-leveraged longs are being liquidated right now.
So what do you think is safe for investors to do in such a scenario?
I think in this scenario, we want to go into more safe haven assets. I think that the industries that are hit hard the most are probably F&B and real estate. So we can go for more like tech and growth stocks, or maybe more defensive stocks, less cyclical stocks where the beta is not so in tight with the market volatility. So maybe you can go into defense stocks, right? Another thing we could go into would be tech stocks like Google, Microsoft. I think this might survive better. And also when you go into crypto, I think that alts will drop much harder than the bigger, higher market cap ones. Because you know, when there's a very bullish sentiment, a lot of new ICOs comes out, a lot of new white papers come up. And a lot of these are actually pump and dumps, they just want to get a quick money grab. But a lot of people pump money into it because everybody's like, oh yeah, crypto, let's go. But I think alts will die much harder, and you gotta be very careful if you have money in that. Even though you're in a loss now, I might say you might have to cut your losses and cut it. But obviously no one wants to sell when it's going down. That's not how you should do it. But actually do everything with some thought, okay? Like, go ask some people around, go do your research before you put things into any coin or any kind of stock. But yeah, that's general rule of thumb.
I think it's very important for you to do your research before investing in like altcoins, because you never know if there is actually a value in the coin, or if not, it could just be a pump and dump scheme.
Yeah, we can go more into this about the fundamental analysis, but for FA on crypto, there's generally not much FA. It's like either proof of stake, proof of work, or there's no real fundamentals to it. But if you go to stocks, I'm sure you know, like as a finance student yourself and an analyst, you will know that there's price to earnings ratio, price to book ratio, this kind of stuff you can look at. So yeah, do your research. Okay, so the second reason I would say would be the circular flow of income. So this happens because of tax harvesting, right? And precisely what we said just now was a circular flow of income. Less savings means there'll be less investments in the market. So this is a economic concept you should know. We move on to tax harvesting. So in general, tax harvesting occurs during November and December, and conventionally year-end loss-making investors will sell their stocks. So this can be used to offset capital gains liabilities for the year. And this, as capital gain losses are tax deductible and can be used to offset capital gains, right? And in general, the last day for tax loss harvesting is end of the year. I think in the UK is about December 29 and the US is December 31st. But there's this rule, you can't, I think it's a wash sale, you can't buy back, you can't repurchase your stocks after you sold them. So you want to like evade like the tax loss, you want to do tax loss harvesting, right? You can't buy them back only until 30 days later, yeah. So in general, on the flip side, investors should be aware that the tax loss, as tax loss sellings gets underway, opportunities also tends to open up for those who have spent the year on the sidelines, right? It means that stocks that actually move a lot when people are trying to save money and do their tax harvesting will actually recover a lot after the 30 days. So these are more cyclical stocks. The beta is closer to the market cycle, right? So we're going to be moving on to interest rate tapering, right? This is the third factor. So with years of inflation, Jerome Powell has also been tightening the monetary policy. This is of course causing a credit crunch. We learn this economics concept as we see money being removed from the markets. So in the end, who loses, right? If there's inflation, I think savers lose out a lot because they have like their 401k. A lot of them lose because of the inflation, you have money and your money is being devalued and you save a lot, you lose out. But if there's inflation, investors, they benefit a lot because everything's being inflated, all the assets are being inflated, right? So in general, yeah, I would say that This also brings into the concept of the velocity of money and M2 money supply. So do you know what M2 money supply is?
Heard of it, but not very much.
So basically, the reason why we have not felt the repercussive effects of the pullbacks at the start of last year, even though that they were printing money exorbitantly, I think something like 80% of US dollars in existence, were printed in the last 2 years. That's kind of crazy. They just kept printing, right? So this is like a new paradigm of quantitative easing and a very relaxed monetary policy. They had this in the past with Japan. It was called helicopter money, and that's why 1989 or something, they had a very huge crash, which they are finally recovering from.
They have not recovered today.
Still kind of recovering, but the reason why Japan has the approach was different in the US because the culture of saving is much stronger in Japan. In US, right, when you give them stimulus, they just throw into stocks, they throw into crypto, and okay. So despite this increase in money supply, right, this when they actually, because of the velocity of money being very slow, they don't feel it because a lot of it just went to their assets. But because of that, they didn't internalize the inflation. No, because nobody's purchasing it.
Spending.
Yeah, then they don't feel the effect of the inflation.
Yes,
but as the effects of COVID ramp down and consumer spending increases, the velocity of money increase, and inflation will also start rising as a result.
Take out money to
spend. So maybe when tourism recovers, a lot of things like this can be expected. So as we approach this new paradigm, I think what we can do, we're probably doing a wait and see approach, So, I mean, this is very new to everybody, to me, to you, and there's so many new different asset classes. There's also the gamification of investing, where a lot of people are putting their money into Robinhood. Because of all this, we have to really take a wait and see approach. But this can also be good because there's a glimmer of hope in the sense that
it can be good for certain investors.
Like crypto, actually, because a lot of people say that this QE thing, right, is a US thing, and it affects the global markets because the US dollar is actually the reserve currency of the world, right?
Yeah.
It's used by, I think, Vietnam, Hong Kong. Many countries also peg their fixed exchange rate to US, right? But cryptocurrency is trying to seek to become the de facto reserve currency, and if it can take its place in saying that, hey, I'm decentralized, I don't abide to any sovereign fund or sovereign government restrictions, I am money for the people. That's what they're trying to sell, right? There could be a case for it being made rising in market cap. It can fight gold.
It can be the future gold.
Yeah, that's what everyone says, right? Okay, so the fourth factor, regulatory restrictions, right?
Yes.
So with greater mainstream adoption, many countries have been imposing more stringent regulations this year. I think we saw Binance,
like
FTX.
The removal of Binance in Singapore, or even like China's crackdown on cryptocurrency. I think we can look at, for China for instance, I think China's crackdown is a very huge impact to why the crypto dipped last year, 2021. And also we can see countries like Thailand are imposing a 15% tax on people who makes money, profits from trading. And I think all this will threaten, according to China, they think that cryptocurrency will threaten national security. So they've announced that exchanges like Huobi and OKEX to be permanently stopping their service.
I mean, the reason they do this, it could be they can use it, say, on the pretext that they are doing anti-money laundering, KYC. They want dirty money to go through. They also don't want to restrict their money outflows. I think that China always held a very protectionist stance. They like to keep the money within the country.
They want to control where
yes,
money
controlling
goes.
Money is very important for a government, if you may know. So in this sense, I think that they might say that they're trying to protect dirty money, but in the sense, a lot of other countries are also doing the same by doing some crackdown. So I think in Europe or some of those countries, they also stop futures trading because they see it as gambling also to some extent. Like if you're allowing 100 times leverage, that's kind of essentially gambling.
I think and also there could be because the money, when it comes so fast, people will lose interest in more
traditional stocks. And truly, crypto has no real fundamental value except but in this sense, right, if they're taking out 100 times leverage, this also controls the market a little bit more because 100 times leverage means your $1 becomes $100, and it makes the derivative market so much larger than the actual asset. So it makes a contract, if you don't understand what derivatives mean, like something like futures or options, it makes the contract market so much bigger than the actual market, and this increases the liquidity,
you end up opening
accessibility. Yeah, and it makes it spike up so much more, and it's like a gambling then to some extent. So yeah, unhealthy also.
But there are some positive moves by some countries. let's say like El Salvador. I mean, the president is pretty optimistic about Bitcoin.
They're making a Bitcoin city as well.
Yeah.
But I mean, they are a small country. I mean, I think that crypto is going to take some time to reach its real potential, and we still don't know where that is. But given there's limited money supply, you can see that this is an asset class that has potential, and no matter what, you can't stop it. It's a rising tide. As millennials ourselves or Gen Zs, I think that people want to see have more control over the reins towards their purse strings, right? So I think that's how I'll try to tactfully put it. Yeah.
I think for each generation, you have one asset that we should look into. Do you think crypto would be the one for
I think so.
us?
I think so. Alright, so fifth part, the cycle is simply overextended. Last but not least, right? Essentially, we actually did a run up from like the low 3Ks. I was there in March 2020 when it was so low, and then we ran up all the way to 60K. And based on the swing highs and swing lows, we're actually at 1.618 extended from your 65K, 68K region. And we actually double tested that resistance line. So we can see that this has been a very long standing resistance line. And it's also at RSI overbought. So in general, I mean, you can put TA as what it is, but in general, I really do feel that crypto as an asset class follows TA. Because TA is basically market psychology. It's basically I will talk about this in another video, but why I think crypto is the easiest to trade is because it's very reliant on market psychology. It preys on the greed and fear of every individual, and every individual has greed and fear. So when it goes up too much, people get greedy.
Yes.
Drop too much, fearful. And there are overextended regions and there are retracement regions that are always respected. So some technical indicators that really make sense for me would probably be the RSI, the visible range, the VPVR, stochastics oscillators, Elliott wave. You need so much of this. Stock to flow, on-chain analytics, lumber to gold ratio, Bitcoin to gold ratio. But always take each of this with a pinch of salt because some of them contradict one another, and you have to use price with volume indicators confluence with one another. So I'll do a whole video on the rundown of technical analysis and some trading rules that I abide to. But in general, these are the 5 reasons why I believe that there's a crypto and stock market crash. Okay, so to close off this video, let's just talk about what we can do moving forward. How do you make money in a crypto or stock crash? Yeah, so we didn't plan this, so what do you think?
I think what's important is that I think most people would want to know like when to buy the dip. Like for me personally, I see Bitcoin going down, but I don't know when is the right time to enter. What if you enter now and then it dips further?
On the contrary, for me, I'm a very contrarian person. I don't even believe that you need to buy the dip to make money. You can literally do things called cover calls, selling your calls, buying put options, shorting. So if you learn how to use derivatives contracts, you will know how to make money in a bearish market. However, shorting an asset class such as crypto, I gotta warn you, it is freaking dangerous, and it's not to be advised unless you know what you're doing. If you short in the run-up last year, you'll probably burn 2 times over and lose everything. However, if you see that it's overextended and some of your indicators show that it's overbought, it might be time to do an option or a futures.
For an option, it is for I think the more patient individual because
you can wait out term lengths. I've been teaching out options how to wait out different time frames, looking at the Greeks, seeing whether the option has value, And so these are things that we can consider. When you look at futures contracts, there's so much to look into actually. She used to think it was just like market order, market buy, market sell. There are limit orders that are good to cancel, IOC, FOK. So consider the funding rates.
Also slippage.
Slippage is an issue that you deal with size. So if you're doing it with like 100, 200, 1000, I don't think you deal with much slippage. But if you're opening large contracts in the 6 digits, the 7 digits, even the 8 digits, crazy I'm not there. But if you open 6 to 7 or even 5, right, you will encounter some things like slippage, especially on altcoins. That's if you're doing that right? Because, okay, one thing I would say, right, that with every new cycle, right, this is one thing I want to add. With every new cycle, there's a lot of new suckers, a lot of new entrants to the market, right? And they do not know that it can go down. They do not know, and they get married to their backs. This is where you can short and take advantage of people who are so married to their backs. They buy it and then they hold.
Thinking it will recover one day.
I mean, it will recover, most likely. A lot of the stable ones or big high market caps on will, but you can eat out so much of when they're suffering. That's when you should be buying, or you should be even eating their unrealized profits because they didn't take their profits and you can eat them through shorts. So this will come to the end of today's video. The next video will be about, how to invest in 2022. If you'd like to see more of our content or like some of the referral links or the affiliate links, check out the link in bio and
hit like and subscribe.
I do. She's used to this now.
Yes.
Alright, bye.
Bye.